What's up, guys? My name's Trey. This is day 5 of the $1,000 account challenge. The account finished today with $925.89. It was basically a break-even day. I ended the day down $1 or 0.14%. But I was green at one point as much as 5%, which is making me implement a new rule that I'm going to talk about as we progress through this. And I also had taken some trades last Friday that ended up being a overall red day. It was a 6% red day. And that day, I was fighting trend pretty hard. I'm not going to lie. I took put trades mostly on bearish setups, like bear flags, head and shoulders, things of that nature. And they just didn't end up playing out. And I'm going to learn from that course of things, because my winning trades over the last week or so have been long, and my losing trades have been short. And that doesn't mean that I'm just going to change my bias to long, but I do have a thought process, and I would like to share it as we continue on. But you can see right here, the account's got $925.89 in it. The day's P&L was $1.26 red, 0.14%. Last 5 days, I've been down $35. Let's just get into the charts and the trades that I took today, I suppose, huh? Today I took 4 separate trades. I traded Amazon twice. I traded Tesla, or not Tesla, my apologies. Hood one time, and Nvidia one time. My first trade of the day was on Nvidia. Let me just get into this really quick and easy and walk you through my thought process here. Coming into the day today, I had a predisposition long, and I know that everybody saw the Moody's downgrade come out, and I'm sure that everybody was thinking, oh, this is finally going to be the correction that we're looking for. But I sat down for about 2 hours when I got out of work last night. I got back at like midnight or 12:30 or something like that, and I looked at stocks until like 2 in the morning. And every single chart that I looked at looked good. I mean, every single one. I mean, it just doesn't matter, man. Like, if I was to pull up SPY, especially, this is just like, if I was to hide, I don't know if I can just hide. If I was to hide all my drawings and my moving averages, right? If you were to look at this weekly candle and you didn't know it was a weekly candle, right? Let's say these are 5-minute candles right here. What would you think this looks like? Would you think this move's almost over based on this last week's candle, which got an increase in volume and closed near the high? Probably not. You wouldn't be looking at it being like, yeah, I should probably go short right now. So why would we have that predisposition? And that's where I think I've sort of failed myself in some of my losing trades today, and probably last Friday when I was down 6% on the account, is I'm getting a little too trigger happy on puts. And that's not to say that they don't look like good setups, but a rule that I'm going to implement for myself moving forward, and I'm going to talk about this more as I look at my losing trades for the day, is I don't want to play puts in an uptrend, and I don't want to play calls in a downtrend. Now, obviously, there's like reversal patterns, and you can play those reversal setups for sure, and I'm going to take those. Like, if the daily time frame on SPY, you got some sort of nasty, wicked, freaking rejection. Let me just unhide all my stuff. Let's say we got some sort of wicked, nasty rejection daily candle, which gave you like a huge topping. Oh, shoot. Gave you a huge topping tail up here and some sort of long body, and it sold off hard, and the volume picked up super heavy. Like, that's probably a short-term signal that maybe we can flip to puts and look to play some levels at that point, right? But on the daily time frame, you haven't gotten any sort of rejection candle even remotely like that. I mean, maybe the most bearish thing that you could say is on the hourly time frame, you're setting up like an expanding megaphone kind of look. You've got this going on. But this isn't like a hyper bearish look by any means. There's not a lot of reason. I mean, even this bear flag in the pre-market got completely invalidated and just wiped, And I think that's just because we're in an uptrend. And overall, if you're to look at things macro, things just don't look bad. I mean, the weekly candle on SPY looks great. Amazon was a little weaker look to me. That was a short that I took. This was actually, if we were going to take a short setup at all, I thought this was probably the best one to take, because the monthly was okay. It wasn't bad. I mean, it rejected a level of resistance. The weekly, not so great, and I'll get into that as I continue on. But let me get back to Nvidia. My thesis for today was bullish just because charts looked nice. The weekly on Nvidia looks great. The monthly on Nvidia looks great. The daily on Nvidia looked like it slowed down a little bit. I mean, this isn't super spectacular, but if we look at this on the 5-minute time frame, you just pushed off of a huge level of resistance. It acted as support, and then you flagged. And I played the flag. And my target was a push up to previous day's highs. You ended up getting that. I didn't stay in that long. I got in the trade maybe about here, and I got out of the trade at the close of this 5-minute candle, because on a breakout candle, I don't like seeing some sort of rejection. In hindsight, if I was to read this candle differently, I would read this as like indecision, not necessarily, sellers stepping in, but, buyers and sellers kind of waiting to see what happens here, because you ended up pushing up after that, right? Now, I missed out on a little bit, but I sold one contract at 20%. I sold one at like 15%. So I'm not mad at that trade. I think I executed it okay. I could have probably gotten 30 or 35 if I waited for this to juice up. But then I would have got met with this candle right here. And, I'm sure I wouldn't have caught the exact top. You know what I mean? So all in all, I'd say that was a pretty reasonable trade. Nvidia looked pretty good on the weekly time frame, the monthly time frame. The daily was okay, but you were holding on to a really nice support level. I mean, it opened up just underneath 132, and then it just pushed right off of it. And that's exactly what you want to see. So I like the strength. I like the volume on the move. I like the flag on the move, and I played the flag. Pretty straightforward, pretty reasonable. My second trade of the day was Hood. And I was going to play this first flag, but I didn't. And I wish I did, because this was just a clean, easy 20 minutes of price action. I called it on stream. I said, Hood's playing out a nice flag right now. If you, it's an interesting look. Keep an eye on it for sure. And it ended up playing out. And then we got a second flag look. And on the second flag look, I didn't take a large, gain on this. I think I made like 5 or 6%. But I entered my position somewhere in the middle of all this. And I got out on this 5-minute candle right here when it failed to create a new high. Because on a breakout of a flag, right, the last thing that I want to see is it not to set a new high. Because when you're in a flag setup like this, you're getting this kind of move. You're getting a huge push up, retrace, consolidation, tightening, new high, right? In a flag, you want to set a new high. And in a bear flag, you want to set a new low. And if you're struggling to set a new high in a bear or a bull flag, or struggling to set a new low in a bear flag, that's a little bit of a raise for concern. And I saw that we rejected on that initial breakout. I saw that the volume was nothing spectacular. It was relatively low still. I mean, especially when you compare it to the rest of this, it was definitely still in a downtrend. So I'm happy with my decision making, even though it popped down and it popped back up. I would have got stopped out of this trade if I held on, right? If I held here, instead of taking that 5-6% gain, then I would have just taken a 10% loss when it broke this uptrend, because my risk reward on this trade was as follows. I was risking a break beneath the flag. I was targeting resistance up here. So it's like a 3-to-1 risk to reward ratio or so. So I would have got stopped out, Obviously this flag didn't play out quite as nice as this one, but this is essentially what I was looking for. Push up hard, consolidate for some time, push up hard. I wanted it to consolidate for some time and then push up some more. That's just not what ended up happening. Regardless, I still got out for a small gain. My losses for the day were on Amazon. And this is a frustrating name, and this is where my new rules are coming into play, is I will not be focusing on puts in an uptrend whatsoever. I am only going to be looking for long opportunities, and I'm going to look at any sort of bearish setup as something to ignore. I do not want to play bear flags in an uptrend. I do not want to play head and shoulders in an uptrend. I do not want to try to time the top anymore. I just keep getting burned on these things. Like, I should have had a 5% green day. Like, if I just walked away when I had my calls, my call wins. My nice Nvidia win, my decent, Hood win. And I didn't play these bearish setups. Maybe I would have caught another flag move or something else, or maybe I wouldn't have, and I would have just been done for the day. But I wouldn't be sitting at essentially break even, and that's a frustrating feeling. I don't like how that feels. So with that in mind, I'm going to ignore these kind of setups in the future. But what I did is I played essentially this flag setup right here. And it obviously extended out, but I only had the information that I had at the time. And what I was playing was, okay, I bought puts here. I'm going to risk a break above the flag on a 5-minute time frame and a hold. I am targeting support down at 204.30. The support level comes from the daily time frame. And like I mentioned before, Amazon was a chart that I thought looked weaker overall. I mean, the weekly time frame is a high volume rejection off of resistance at the 215.53 level. I think this could set up for a gap fill at least. I mean, if the market's weak this week, I don't know if you're going to get that or not. I'm just going to look for upside opportunities at this point. I keep getting burned on these shorts, and I think it's for a reason. It's obviously the pain trade right now, and I keep saying that and keep making the same mistake, but not anymore. I'm making this rule. I am not taking bearish trades in an uptrend. With that said, you ended up setting a freaking falling wedge pattern up, and I got cooked on them, but it ended up pushing up. 5-minute candle closed above that bear flag setup, and then it just got flushed down. So I got stopped out of this trade for a loss of like 13%, when down here I would have been up maybe 3, 4, 5. Now, would I have gotten out for 3, 4, 5%? I don't know for sure. I mean, I wanted to see at least a test of these lows. So I'm not going to say that with certainty, but I probably would have gotten out for less than 13% after seeing this candle right here. This would have been a red flag for me. Like, okay, this just isn't looking like it wants to go my way. But then after this, I got back in anyways. And this trade, I wish I could take back. I didn't even take a large loss on this. I took a 13% loss on the first Amazon put. I took like a 5 or 6 or 7% loss on the second one. But I entered immediately after this candle right here. I was like, all right, this is just a juke. I'm going to get back into my position. And then I caught maybe just a hair below this candle right here at the top, I'm going to say about there, like this level. And I think the most I was up was like 5%, 4 or 5%. I was looking for more than that, and it got faded. And I got out right at this candle here, man. I said, all right, this is not going to go my way. I'm going to get out of the way of this, and I'm gonna call it a day. And that was noon. Then I had a stream from 9 to noon. So those were my trades for the day. I went 2 for 4. I had 2 winning trades. Nvidia, I had 2 contracts. I got out of one for 15%, one for 20. Hood, I got out for like a 5 or 6% gain. I took 2 Amazon losses. The first one was like 13, 14%. Second one was like 6, 7, 8, somewhere in that neck of the woods. But I've definitely got a takeaway from today. And my takeaway is don't fight the trend. I've said that a million times, but I'm implementing that as a new rule. I've implemented a couple new rules since I've started streaming and trading consistently in front of you guys. And the last one before this was anytime I am up more than 10% on a position, I am not going to let that trade turn red. That has done wonders for me. That's definitely transformed things, even in just a short time since I've started trading on my live streams again. But I think this is going to be another big one. I think this is going to be a game changer for me. Because if I look back on all the trades that I've taken over the last week, my winners have been long. And that's not shocking, right? We're on an uptrend. Why fight the uptrend? That is not to say we're not going to get a correction, because I think that we're going to get one. But I think that the overall trend, like if you were to ask me, are stocks going to be higher or lower than today, 2 months from now? I think they're probably going to be up, Will we have a red week or two? Maybe. I would assume things don't just go straight up, although they have for the last 6 weeks and maybe 7 after this. But I'm not going to fight the trend anymore, man. No more puts in an uptrend. No more calls in a downtrend. Play the trend. Look for the opportunities that make sense with the trend that you're in right now. I'm not going to play these bear structures anymore while we're in an uptrend. I'm not going to play the bear flags. I'm not going to play the head and shoulders. I'm not going to play them. I'm just not going to do it. I keep getting cooked on them. They keep being fake outs. They keep getting invalidated. And I'm tired of donating my money to the wrong side. I want to take money. So that's what I'm going to try to do. That's my lesson for the day. Frustrating to have been up 5% and then break even essentially. I think the account was up at one point to like 975, 980, somewhere in there. So I was up like 50 or 55 bucks. But live and learn, man. That's how the market goes. It's not forgiving. You got to just take things on the chin and keep showing up. And whether you guys like it or not, man, you're stuck with me. I'm coming back tomorrow. Another stream. Let's make some fucking money, hopefully. Y'all take it easy. I'll see you later. 9 to noon Eastern. Peace.